Hey, it's Clay Trader, and this will be a video chart on ticker symbol DRYS. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to do this time frame. I think it does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a little bit easier to see. I've done this analysis a few times before, so that's where this green line and then red line up here are coming from. But want to get things updated here after we now have an answer to the question that we've been tracking. And I think if anybody that's tracked the stock for a while, I doubt anybody is actually super surprised by it. And that had to do with, the question of, was there some sort of bottoming action? I mean, there's no doubt about it. The price did start to go sideways. And even within the sideways action, there were some decent sized bounces, which brought up, the logical question, hey, is this some sort of bottom? And again, this is why I bring up the comment. If you've been watching this one for a while, and as I've talked about in many past videos, the bears are in full control until the price can get up above this purple line there, which is the 50 period simple moving average. And you can see that even during the sideways portion, price never actually got up above that purple line. And then you see today that not only was this not sideways price action, the price is now broken down through it and is now sitting at all-time new lows, which prompts some updates here that need to be made. First one being just a foundational principle in charting, which states when levels of support are broken and closed below, they tend to act as resistance. So any sort of bounce on the bull's part, that first key hurdle that needs to be cleared above is that dollar mark. I'm just going to get this line out of here. Doesn't really pertain. Well, it still pertains, but it's not relevant anymore. So we'll try to keep this analysis as clean as possible. So dollar, the newest area of resistance, again, like I said, with any sort of bounce. As far as areas of support are concerned, that's just simply where the bleeding finally stopped today. And that's right there around the 89-cent mark. So, definitely some trade plans can be put together. And as I said in the past, and will continue to say, this one is always worth watching because you can't deny the fact that this does go on some very nice bounces. I mean, from here up to there, and then, there's another nice bounce right there. No doubt about it. There's been some good dead cat bounces. But, this is definitely not, if you're brand new to the markets and don't know how to put together a risk control plan, or you're terrible at honoring stop losses, I mean, these are definitely not the setups for you. But, from a charting perspective, the price did start to go sideways again a little bit today. So whether or not that's setting up for another, dead cat bounce remains to be seen. But it does present an interesting opportunity, so we'll see how the bulls unfold this week. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.